What's up, guys? Alan here with EatSleepTrade.net. Going to be bringing you guys the swing trading watch list and market update for the week of June 20th. I'm a little bit sick right now, congested and stuffed up, so if you hear me clearing my throat or I don't sound like my normal self, that is why. Just want to say happy Father's Day to all you fathers out there that are hustling and making a great life for your kids. It's an important job and an important task to take, and not always an easy one. So happy Father's Day to everybody out there, and let's take a look at the stock market for the week coming up. Alright, so up first, of course, we're going to take a look at the SPX, and had a pretty big selling pressure the last 2 weeks as we broke back below that 2100 area. Again, I've talked about this 2100 area for months and months and months and months now before we even, got rejected here at 2100. That was kind of my key area of let's get over 2100, and that puts us fairly close to testing our all-time highs around 2130s 40s. And a big reason for that is that 2100 is kind of the last psychological whole dollar area that we get to before we see new highs. Maybe a 2150 or 2200 would be that next area, and those are both up in new highs. So that's why 2100 has been really significant. So anyhow, we're gonna have to see what unfolds in the next week. We came all the way down, tested our 2055 support, had a nice rally and closed back above 21 or 2075, so that was a good sign. We're broken down below our moving averages again. However, the 20-50 day moving averages are still going in the right direction. Our 20 is still above our 50, and the 20 looks like it's going to be heading up towards 2100 here. Huge volume on Friday. Like they've seen, larger buying volume, but nevertheless, that's great volume coming up off the bottom. Shows a lot of potential buyers down in this 2075 2055 area. Everybody seems like they're willing to load up down in this area for a possible move back over 2100 and getting up to those new highs. I mean, everybody's anticipating that new high breakout. So, when the whole world is waiting for that new high breakout, sometimes you get the opposite. And you really cannot predict where the S&P 500 is going to go. Only thing we could do is just kind of watch it. And I don't trade the SPX. I know a few people that do trade it. I just follow it so I can gauge market strength, and that lets me know that the stocks that I find with large relative volume that I'm putting on my watch list, in combination with a overall strong market, just increases the odds that you're going to be on the right side of the move. So that's why we follow the SPX so closely, and every week do an update on it. Just trying to stack the odds in our favors. We need as much things stacked in our favor, and if we're going long or buying breakouts, you better believe that we want the SPX going up, showing strength and trading good volume as well. We're not going to be trying to buy pattern breakouts while the SPX is crashing down to 1950, revisiting these lows or highs, I guess technically back in the beginning or end of January. So that's how we use the SPX. 2057, 2075 key support areas. We've managed to hold 2055 and kind of been bouncing around that 2075 area. Good volume Friday, big relative volume. Our moving averages headed in the right direction. This is a good 2055 is a good test area to place a higher low and then create a higher high as well. We've got a high, and now we've got a higher high right here. Not major, but it still is a higher high. So if we create this low and we can create a higher low, that's going to give us a nice idea of a possible trend channel that could be headed up, in that upward direction, especially if we get to put a new high, not just over prior highs, but a new high in the overall market altogether could be huge. All right, guys, so that's enough about the SPX. Kind of rambled on a little bit about that. So let's get into the stocks for this week. And the first one I want to take a look at is BCOR. So you can see the stock's pretty beat up. It's came from 17 a year ago all the way down to under $5, and it's been rallying a little bit the last couple of months. Had some big volume come in and a nice move from 5 up towards almost $9. So I'm just kind of watching this little consolidation channel right in here. You can see we're moved back above our 20-day moving average. Nice big relative volume on Friday. Look for a move over this 910 resistance area. $9 would be a good key to get back above. And then you've got short resistance just ahead around 950, 940. So those are going to be your key resistance areas right there. Whether we just get a strong breakout and the stock continues higher, or if we get a test 950, pull back to 9 with a nice hammer candle that forms on the pullback and then giving you a good entry for a move back through 950. We've got a pretty big area here from 950 to 1070, a good range that we could try to get a setup involved in. So we'll see what happens next week. Watching 910, 950 resistance. You got 815 support, so you definitely want to see that hold up if we do see any more consolidation inside that channel. Next up, let's take a look at EXAS. This has been a pumped up stock on social media. It's been trading huge volume. It's rotated its float multiple times, meaning it's trading more shares than are available to trade in the public. So if a stock has 100 shares available to the public and people are buying 200 shares, then what that does is increases the premium on those original 100 shares. For example, let's say you have two guys that each want to buy 100 shares, and there's only 200 shares available, and somebody owns those 200 shares, but you have a guy that's standing here waiting to buy those shares. So are you going to sell him the only shares available that you have? Are you going to sell them to him at a lower price, or are you going to take those same 200 shares that you bought for $7 and you're going to sell them to one guy for $8, and then you're going to sell your other 100 shares to the next guy for $9? Are those shares really worth $9? No, but the volume has increased so much and the float has rotated that the demand is so high that the people are buying the same shares over and over and over, creating this huge run. Now, another thing, and the reason I'm putting this on my watch list this week, is this big red bar right here. So coming out on the 14th, everybody, had this on radar after this big move, whether they got in right here, whether they bought in at the top. Either way, big volume, it shows up on people's scanners and they're watching it. The next day, the stock gaps up pretty big, over 10, almost over $11, over $11. And then what happens is it gets a little tiny peak and then it starts selling off, and all these sellers come in hard, and everybody wants to get short right here because they know, hey, it's a junk stock. It's up because the float is rotating. It's not up because the value of the shares is worth $11. So now you get this gap up day where all the bulls thinks it's headed higher and they all get trapped in as it comes down, but all the shorts start loading in on the second day runoff, so that way they can anticipate the breakdown and a move back towards 7. Well, look what happens the next day. Over on the 16th, you get a gap up over $10 and ramp back up over $11. Nobody expects that. So now you have a possibility that there's a ton of shorts trapped in this gap up sell off, and now they're going to get squeezed. And you can see how the chart's consolidating and holding up here. So you've got support around 10. I think if the chart breaks below 10, maybe my idea is incorrect and not going to play out. But either way, you start watching this $11 area, and come Monday, if you get a move over 11, there's no reason why you don't see 12 on a large short squeeze. So there's the idea for EXAS on a short squeeze play. Next, let's take a look at GSM. I'm going to try to get through these a little bit faster now. I've been talking a bit much. Nice wedge here, large wedge on the daily form. So we're going to go ahead and put that on watch. We've got resistance here at 950 and then again at 1030s, 1040s. So watch, you see the high relative volume on a Friday. So look for a continuation move for that. Next up, let's look at LSCC. Alright, we got a nice formed wedge right here. Nice hammer candles forming, buyers showing up here at the 50-20 day, 20s above our 50, both trending in that upward direction. We've got resistance here around $6. So look for the breakout of this wedge. Good volume on Friday. We see continuation, possibly get a move up to 640, 650 with our next resistance up here at about 680. Let's take a look at NVAX. Traded this one a lot in the past, but it's had a pretty good ramp down here from just above $4 up to almost 7, and it looks just like GALE. If you guys remember that chart from last week's watch list, where it was kind of ramped up, it pulled back and then came back up to test these prior highs, and this is kind of set up just the same. It's got big volume, a little bit more to the bid side pressure, but we're looking for a breakout to the top side of these lower highs and a move up towards 27. You've got a strong 650 support area, so if that breaks down, then the idea is incorrect. So let's take a look at NYLD. So this one's trading in a nice channel right here. You can see it's actually way off of its highs, been bouncing around down here, but has since kind of found some support here around $15 and resistance up here around 1670. Nice engulfing candle Friday with huge volume. Our 20 days still trending above our 50-day moving average, which is a good sign. So I like this engulfing on big volume for a move back towards 1670s, or at least a move back towards 1550, 1560s at our 20-day moving average there. Next, let's look at ORBC, another one we've had on our watch list many times before, trading this big uptrend. Also tried to trade the breakout right here, looked good volume that came through, but failed, rejected, ended up getting stopped out. Have a nice consolidation now. You've got strong support right here around 890s, 885s, so that's going to be a big deal to hold up. You've got resistance here at 970s, which is going to be pretty significant. You've got a big volume bar on Friday, buyer stepping in, and you just got the breakup back above your 20-day moving average, testing that 50-day moving average. So this 970 area is going to be pretty significant. See if we can break out. Maybe we get a breakout pullback to give a little bit of a better entry with the proper risk. Obviously, you don't want to buy at 950, risking at 885. That's way too much risk. So maybe we get the breakout pullback type setup where we can find an entry on that. SEMG. Just a nice trending stock. You could see how it's just held its trend very well. The 20's just been trending above your 50, just as we like to see. And holy cow, look at the volume bar on Friday. Again, another nice engulfing candle with a large volume. So definitely on watch into Monday for a move up towards this 3270 area for a possible breakout and a move up to 3610. I really like the entry here with your risk below prior low around 27.96, right below $28. So you got hold number support, moving average support, trend line support, and a nice tight range on huge volume. It's not very often you see tight range on big volume. Normally it's big volume, big range. So when you get that opportunity of a buyer stepping in and just collecting shares as low as he can, it really sets up nice for a move, especially in an uptrending stock. Next, let's take a look at TERP. And you can see this one here. It's just found this multi-bottom support around 720 and is consolidating downwards, kind of forming a descending triangle, which long-term could be a bearish pattern. But at the same time, it's off these highs all the way up around 19 after this huge sell-off. So it has a lot of room above if it does break this consolidation. Nice little volume on Friday, enough to bring it up on the scanner and make it worth putting on watch. For now, I probably just keep watching it to see if we get a move to the top side of that channel, more consolidation as this range tightens, and then maybe a breakout there. So keep it on watch. Who knows, maybe we come up, start getting above our moving averages. We'll have to take a look at that. It's in a strong sector. It's a utility stock, so that's another thing that it really has going for it. Even though it's been kind of bearish, the sector itself is turning bullish, and this stock is kind of showing that, trading this volume off the bottom support here. So move up towards the top of this wedge channel, which would probably put you around $9, $9.20. Looks like a pretty good setup. TXMD, this will be the last one, and probably my least favorite in the charts this week, but I decided to put it on there because the one stock I put on my list, but I don't add it to the video, will be that one stock that breaks out. But either way, we've got another uptrending stock right here. 20-day, 50-day moving average is moving just as we'd like them to see. You've got strong support here around 850, so that's going to be a pretty significant area if we can get above it. You've got a great risk-reward entry right now around 840. And you're risking around $8 or Friday's low, which is around 813 for anticipation move up to 920, possibly break through 920. So in an idea like this, you've got good volume. You look for a continuation candle on Monday. You could also use Monday's low risk depending on how that candle forms. If it creates a nice big bar and you're able to get into the morning and it closes here, above your 20-day moving average, then you've got a good risk reward entry again for a move up to 920, especially if low days over this 850 area resistance turns support, and that gives you a nice place to kind of guide yourself if the trade starts going against you. Alright guys, that's going to do it for this week's watch list. That was a lot of stocks. I know I was talking really fast, but it was a lot to get through, and I don't want to create an hour-long video. Anyhow, here's our chart for the SPX, and that is going to wrap it up for this week's watch list video. If you have any questions or suggestions, please leave them in the comments below. Don't forget to like and subscribe for future videos. Likes is what makes me create these next videos, so please do that. Also, check out the website, eatsleeptrade.net. Lots of great content on there. I've been developing a lot of new stuff, so if you guys haven't seen some of the new lesson pages, definitely check those out. And don't forget to subscribe to our weekly newsletter so you guys can get these videos sent directly and watch list sent directly to your email, so you get notified ASAP as soon as they are uploaded. You can do that right on the homepage, eatsleeptrade.net. Alright guys, thanks for watching. Good luck into next week, and we'll see you in the next video.